Back with us here on Midcap Radar in conversation now with the management of Suraksha Diagnostics, the recently listed company. They released their first quarterly results after becoming a public company. To talk more about the quarter gone by and the road ahead, we're being joined by Ritu Mittal, who is the promoter, joint managing director and CEO at Suraksha Diagnostics. Ritu, good afternoon. Thank you so much for joining in. And first quarterly results after your listing. Second quarter generally is a strong one for diagnostic companies, right? Because of the monsoon months and so on and so forth. What has the volume growth been this time around for the quarter? And what do you see your projections for the second half and thereby a full year number for the volume growth as well?
So as you rightly pointed out, quarter two is definitely a more robust quarter for the diagnostic industry. And Suraksha has shown a year-on-year growth of 12.5%. This is in spite of the fact that West Bengal had a major disturbance as far as the medical community is concerned, and therefore our figures are a little muted. But in spite of that, our growth has been pretty robust. We have shown a growth of around 12.3% quarter on quarter. And if we look at the first half, our growth has been 14.5%. Our EBITDA has shown a growth of 25% year on year. Right. And also our PAT margins have increased by 45% year on year for the first half.
That's right. Ms. Mittal, yes, we do have the numbers on the screen, like you could see. One thing which we want to know from you is, as far as Q2 was concerned, what was the volume growth? Were there any price hikes that were taken? So when it comes to the revenue growth of close to 12%, what was contributed by volume growth? What was the pricing action? And could you give us a sense of, how volumes have panned out in Q3 so far?
So there was no price impact because there was no price hike that we have taken. And therefore, the entire growth is basically volume growth that has come into the company.
To take any price hikes in the second half?
No, nothing done as of now.
All right. No, but a lot of your peers within the diagnostic space are shifting focus to expanding within the tier 2 and tier 3 cities, be it Dr. Lal or be it Metropolis. What are your plans on that, on expansion in general and expanding into tier 2 and tier 3 for the second half of the year?
So definitely expanding into tier 2 and tier 3 is very much there because tier 1 is more or less, saturated nowadays because everyone enters the metropolitan cities first. And as we want to expand our presence in our core geography, we definitely have to go deeper. So we plan to establish centers in all the major towns and cities of the districts, while we want to cater to the rural population through a franchisee network.
Understood that. The other thing which you want to know is, amongst your peers, you are a company that manages to enjoy much higher EBITDA margins. What is the reason for that? And number two, FY25 end, where will you end in terms of top line, EBITDA as well as PAT growth? You could even give us the actual core numbers. And FY26, what are you targeting?
So if we look at the integrated model, our margins are lower than our peers. When we look at the pure PAT play, our margins are higher, but that's, I believe, the business economics. And we expect to end the year with a revenue of around 270 CR, with an EBITDA margin of around 38% and a PAT margin also of around 15%.
Right. So 33.8% in the first half. So you expect a significant improvements in margins so to get to that 38% figure for the full year, if I am reading that correctly.
Absolutely.
Right.
As economy is setting in, volumes are growing and margins are improving.
Your mix so far has been an even split as of now between pathology and radiology, is almost a 50-50 mix. Do you expect that mix to sustain, or do you plan on emphasizing on one particular segment over the other to grow that mix forward?
So typically what we have seen in the industry is pathology always exceeds a little as far as the mix is concerned. And similarly for Suraksha, our pathology business is around 50% as compared to 46% of radiology business. Going forward also, we think we would have similar levels.
Ms. Mittal, last time when you spoke to us, during the IPO, you did mention that you are looking at going ahead and, announcing a few niche acquisitions. Number one, any targeted entities that you have looked at, what will be the size of the purchase that you're making, and which geographical location would you be targeting? Anything we can expect to be closed by end of FY25?
We are looking at a couple of acquisitions. We may be able to close one or two by the end of this year. And they are all based out of East India and Northeast India.
And what will be the likely size of the company that you're looking, or what would be the purchase size that you would be looking at?
The purchase size together would be somewhere around 5 to 10 CR. That's what we are looking at. So that will be funded through internal accruals as well.
All right, Ritu, thank you so much for sparing time and joining us today on the show to discuss the quarter gone by and, of course, to talk about the road ahead as well for the company. Wish you good luck for the second half. That was the management there of Suraksha Diagnostics.